Welcome to the Daily Block, the top events happening in the past day in crypto and why they matter. Strap in, price action, IPO flexing, and legal receipts are on the menu. Bitcoin breaks key resistance at roughly $114,000, altcoins rip. Bitcoin ripped through the $114,000 resistance level overnight, which promptly turned risk-on flows back on and sent a broad altcoin rally into overdrive. Solana and XRP led the pack, with a secondary wave of meme and pre-sale tokens catching the FOMO train. Futures open interest and ETF flows look supportive, and on-chain indicators show buyers stepping in on dips rather than selling. In short, shorts got squeezed, longs piled on, and alts caught a clean rotation. Why it matters for traders: reclaiming major BTC resistance often sparks leverage cascades, short covering, and fast spot rotation into alts, perfect conditions for quick scalp plays and intraday alt squeezes. Switching gears. Gemini IPO, $Gemi, debuts hot on Nasdaq, Winklevoss push BTC bull thesis. Gemini priced at $28, raised roughly $425 million, and opened into the teens of percent gains before flirting with intraday highs near $45.89, then settled still materially above the IPO price, valuing Gemini in the multi-billion club. The Winklevoss twins used the spotlight to double down on the maximalist meme, throwing out their longtime $1 million BTC pipe dream and reminding institutions why they think crypto is a permanent allocation. The splashy debut pulled eyeballs and capital back toward exchange equities and the exchange token complex. Expect the headline to be replayed in pitches for weeks. Why it matters for traders: a well-received US native crypto IPO is sentiment fuel. It can lift exchange-related tokens and equities and nudge institutions toward crypto exposure, creating tradable momentum in those names. On to the policy theater. US strategic Bitcoin reserve talk intensifies. Galaxy says likely by year-end. Alex Thorne at Galaxy Markets warned the market may be underpricing the odds the US will formally create or at least announce a strategic Bitcoin reserve before year-end. Lawmakers filed a bill asking Treasury to study feasibility, and remember the prior executive order that put the concept on the table. Details like operational structure and size are still a black box. The point is simple: if the feds decide to accumulate or credibly plan to, that's incremental structural demand. Traders smelled the potential and bid the rumor. Why it matters for traders: any credible government accumulation or even a visible study creates a structural demand thesis and squeeze risk, a catalyst that can amplify rallies and force aggressive position adjustments. Moving to regulated stablecoin land. Tether unveils USA, Bo Hines named CEO designate for US regulated stablecoin. Tether announced a US regulated, dollar-backed stablecoin named USA, positioning it as Genius Act compliant, and tapped Bo Hines as the CEO designate for the US product. Anchorage Digital and Cantor Fitzgerald are slated to handle issuer and custody roles, which reads like a handshake between old-school finance and on-chain plumbing. Tether frames USA as a regulated on-ramp for institutions and dollar settlement, trying to capture flows that might otherwise go to USDC or bank rails. Expect legal and market sniping from competitors, but also rapid liquidity migration if distribution is executed well. Why it matters for traders: a widely distributed regulated USD stablecoin from Tether could reshuffle on-chain liquidity, influence pool weights, and change routing. Watch USD pair flows and stablecoin spreads after launch. Quick pivot to pre-sale chaos. Block DAG pre-sale/infra update, roughly $405 million raised, miners shipping, Singapore event October 1st. Block DAG claims about $405 million raised in a pre-sale, more than 26 billion coins sold, 3 million daily mobile miners active on their X1 app, and nearly 19,800 physical miners shipped. They've locked a special pre-sale price into the build-up to an October 1st Singapore deployment and a CoinStore event, pushing the "we delivered hardware" narrative to counter pre-sale skepticism. That kind of pre-sale scale sounds sexy until listing day liquidity math and distribution mechanics hit. Big pre-sales plus hardware rollouts often mean concentrated selling pressure when tokens list, and sometimes promises don't match reality. Why it matters for traders: heavy pre-sale raises and hardware rollouts create concentrated seller risk at listing and extreme social media volatility. For pre-sale or small-cap traders, monitor unlocks, delivery risk, and listing flows like a hawk. Legal drama incoming. Coinbase moves to sanction SEC for destroyed Gensler texts, major regulatory drama. Coinbase filed to sanction the SEC alleging spoliation, lost or destroyed Gary Gensler texts flagged by an Inspector General review, arguing it undermines the SEC's case in the ongoing enforcement fight. This ramps up the stakes. If a court forces discovery remedies or allows adverse inferences, that could materially weaken the SEC's hand. The case is already a political and legal lightning rod. The discovery phase is where prizes and reputations get decided. Market participants are watching because the outcome influences how risky compliance battles look for exchanges and token projects. Why it matters for traders: if Coinbase lands favorable rulings or forces evidence disclosures, regulatory risk pricing for exchanges and compliance-sensitive tokens could shift quickly, creating tradable volatility in equities and spot markets. On-chain detective work now. Wallet tied to the $300 million Coinbase hack buys about $18.9 million in ETH. An address linked to the May Coinbase social engineering breach bought roughly 3,976 ETH, about $18.9 million, using consolidated DAI at an average near $4,750 per ETH, following earlier large buys in July. On-chain sleuths flagged the activity and are watching for more accumulation, layering, or laundering patterns that might signal an exit. Hacker-associated movement can trigger exchange freezes, emergency delists, or panic sells if tags propagate and custodians act. Traders should treat tainted flows as a volatility risk with legal meat hooks. Why it matters for traders: large moves by flagged hacker addresses create sudden liquidity and reputational risk. Unexpected swaps or sells can spike volatility and trigger exchange action. Mark tainted addresses and avoid being front-run into wash exits. Last one, ETF plumbing updates. ETF progress, BAR, SOL, XRP ETFs on DTCC and October XRP ETF decision window. Several spot ETF filings, including Solana, Hedera, and XRP, cleared preparatory steps through DTCC/NSCC, nudging market odds higher for approvals, and the SEC decision windows for multiple spot XRP ETF applications cluster around October 13th and October 20th. Rex Osprey's spot XRP filing just cleared a recent administrative 75-day review step, which is boring paperwork that still moves markets because it reduces uncertainty. Even administrative checkpoints are tradable news. Market makers, APS, and whales prepare inventory and capital ahead of potential authorized participant flows. If approvals land, authorized participant buying could be a multi-billion-dollar structural bid. Why it matters for traders: ETF approvals or even credible progress creates venue-based demand. These administrative milestones can spark anticipation rallies and rapid rotations into the underlying tokens during news windows. Short transition to close. Want trade ideas? If you want, I can distill immediate actionable trade ideas from these headlines, setups, key levels, and catalyst dates, or I can produce a short watch list with stop/loss levels and likely volatility windows for the next 2 to 4 weeks. Which helps you most? Okay, hit subscribe if you want daily snarky but useful crypto recaps and trade-ready news. Like, follow, or send a tip if you enjoyed the chaos. That's today in crypto, where the gains are imaginary and the pain is real.